Hey, this is Diggy here from ForexHabits.com. Today it is Saturday, it is 8 December 2012. I do have a bit of a cold, so if my voice sounds funny, don't worry about it. We're going to look at the Euro US dollar, but first, at last week's analysis, which is on the YouTube channel, I did say various things. I did say that December should be an up month, and the strategy for December is to buy the dips. I said for the Euro US dollar last week that if it came at 128.50, it was a good buy area. It dropped to about 128.73, so we never got an entry point. Euro Japanese yen, I said 105.50. It never got quite there. It went to 106.05. The S&P 500, however, I did say to buy at around 1400 with a stop below 1390. Now that worked out very well because it dropped to 1398 and shot back up and ended the week at 1417, so that is good. The Nasdaq, I said to buy at 2640 with the stop just below 2625. It did drop to those levels initially, then it shot up to 2660, then it dropped back down again to 2616, and now it ended the week at 2640, so that was kind of a mixed one. Now we're going to look at what is going to happen for the week ahead, because let's start with the Euro US dollar. And this is a very tricky one at the moment based on the chart, because simply on the weekly chart, the price action in this recent week went exactly to this trend line, this descending trend line that's all the way from 2011 over these tops. It coincides with the 100 exponential moving average on the weekly chart, and this horizontal level where you can see here, and where it kind of was the spike low at the bottom here. So that is a very strong resistance level, and we're still in this uptrend all the way from June. So this ascending trend line is kind of holding it up together with the 21 exponential moving average on the weekly. So there is definitely room for further upside, but at the moment it's kind of in this range between these two trend lines and these two averages, and it's very possible that next week we would drop to this trend line and this exponential moving average, which is around 128.25. So should it come there, that would be a buy area with a shortish stop of 20 to 30 pips to see if it holds. And otherwise, if we do go back up to the top, we're going to see if it's going to break this average. If it does shoot through here, then we're going to head a lot higher. We're going to head probably somewhere even up to 137 if this kind of level of 130, 170 breaks in the week ahead. I did say on the monthly chart last week in the analysis that December was looking to be an up month. You can see these averages are holding. So should this drop next week to the level where I said 128.20 and we can buy there, and it does shoot up later in the month towards 133, that would be a nice profit. So should it go to 128.25, somewhere around there, that is an area to go long, stop of 20 to 30 pips, and then actually see if we can ride that out for the rest of the month. The Euro Japanese yen on the weekly chart, it's also a bit tricky, but I would say that the 21 exponential average will have support and will hold. So if we drop this, and this level is 105.65, so I would enter a short position, or sorry, not a short position, a long position, buy at this 21 moving average in the week ahead if it does get there. So at around 105.75, 105.70 with about a 30 pip stop, and see if that holds. Because once again, I also said for the Euro Japanese yen, December is a strategy to buy the dips, and it does look like it will go higher for the rest of September. So that's something that we're going to have to test and see if that holds. If it does break through that average and it does end up turning negative, then we could head a lot lower because we have this trend line here. And if it does drop all the way back to that, obviously you're not going to try and hold your longs. So that's why I say 20 to 30 pip stopped on the buy entry point. If that works, we should head a lot higher. But in case it breaks, you get stopped out, minimal pips loss, and you'll head towards the downside. Now the S&P 500, that is the only chart on the weekly chart that's looking like it just wants to head a lot higher, straight higher. I actually don't think this will drop much further than about 1404, maybe 1400. It shouldn't come much below there, and then we can head all the way up to about 1460. So if you're still holding that long position from last week, congratulations, because you should hold on to that and just keep your stop at break even 13.98, somewhere around there, and you have no risk. If you are looking to go long for a new position in the week ahead, you would want to go long at around 14.05, stop maybe 13.95, something like this. And the Nasdaq on the weekly chart is looking a bit funny, but it's still holding above its 50 exponential average, so that should be support. Nasdaq should not drop below 2600 in the week ahead. If it does come again to this low area of around 2620, 2615, you want to do a buy with a stop just below 2600, because once again, same as all the other markets that I've covered, I do think the Nasdaq will end up going higher in December, and probably as high as 2750, somewhere around there. So we want to try and get long for those things. Once again, always trade with a stop, trade with money you can afford to lose. Correct money management, don't risk more than a few percent of your account on a single trading day, and you will do great. Follow this analysis. Be sure to subscribe to this YouTube channel, share it with your friends, leave a comment, and of course, sign up to the blog at ForexHabits.com. Enter your email to be sure to get updates of analysis and working suggestions. So, be sure to see you next time. Cheers.